perhaps it would be helpful to address how you define growth hacking as the person that really coined that term, because there are so many misconceptions.
I think Dropbox was at the time it reached $1 billion in recurring revenue, it got there faster than any SaaS business had before. And unfortunately, you will never have the budgets to build awareness. Early stage startups don't have the luxury to do all the things that are in a big, thick marketing textbook. We ended up acquiring the 800-pound gorilla, so the strategy worked. LogMeIn sold for $4.3 billion.
Sean Ellis is one of the most influential thinkers on growth in the world. He coined the term growth hacking and is author of the best-selling book, Hacking Growth. Sean spearheaded the go-to-market execution for startup unicorns like Dropbox, Eventbrite, Lookout, and LogMeIn, putting them on the path to billion-dollar valuations. Sean also led the use of the freemium model and developed the Sean Ellis test to assess if your startup has product market fit. Please enjoy this episode with Sean Ellis. This is Conscious Tech with Sarah Tajima. Today we have Sean Ellis with us. Super excited to have you on the podcast. You're kind of like an OG person that I really look up to in the industry, especially because I started working in tech and growth. To get started, can you introduce yourself to the audience?
Sure. It could be a really long introduction or a pretty short one. I think I'm going to do a different introduction than I normally would, just maybe based on sort of where my head is these days. I think a lot of my career is defined by not wanting a normal job, including picking up and moving to Europe right out of college, not knowing exactly what I'm going to do. Not sort of out of like laziness, but just the idea of a mundane, boring job was always scary for me. And then hadn't really thought too much about the startup world. But that's one of the things that I have found with startups over the years is that they're not normal jobs. They're not mundane. You're doing a lot of everything, and it's pretty exciting. Within, I think maybe a year of graduating from college, so I moved to Budapest, Hungary right out of school, and had a friend who was starting an internet company. Late 1995. I had been doing advertising sales for a little bit, but he was starting it, and I had some commissions that I'd built up, and I decided I'd make my first investment and put everything into his company. And turned out 1995 was a pretty good time to put it all on red, or put it all into an internet company. And so I ended up joining full time initially in a sales role to this company. It was in they were creating games. So it was I joined and was basically hired to open the New York City office, which was basically like work out of my apartment in New York City. So they sent me from Hungary to New York, and I was supposed to sell advertising, but we didn't have anybody on the product. And so calling on some of the biggest advertising agencies in the world and them asking about our audience, I communicated to the CEO that it's going to be really hard to sell advertising if we don't have an audience. I don't think it was really a little bit of kill the messenger initially when I told him that, but after he processed the information, he said, I thought about what you said, and why don't you try to build audience for us? And so that's how I ultimately got into growth. And trial and error. I went out initially. It kind of all traffic was going through big search engines at the time, and I mean they were just kind of getting started, but there was kind of the 5 search engines, and I went and they had a minimum ad buy of like $20,000 or something, and so that's what I did. And my CEO was actually really happy. It's like, wow, it worked. We have a bunch of people. And I started kind of doing the math, and it just didn't seem like I'd get any kind of return on investment on it. And so just from there started to figure out that I didn't need to spend a lot to see if something was going to work or not. So got it down to little buys. And so over the years, I've essentially mostly self-taught, self-learned. There wasn't really a lot of books in the mid 90s on how to do online marketing. And so figure it out on the fly. And, but over the years have worked with a lot of companies. That company ultimately went on to become a top 10 website in the world. It was called uproar.com. We did some really, really cool things to grow it. Probably one of the first widget strategies, kind of if you think about how YouTube grew, we ultimately moved from these paid ads to figuring out let's widgetize our games and start the gameplay experience on other websites. That was really effective. And then Same team started LogMeIn a couple of years later. We sold that first business Uproar to Vivendi
Right.
Universal. Same team started LogMeIn, and then I stayed with LogMeIn through the IPO filing. Again, in our case there, we really pioneered freemium. We were super early in freemium, and it was the reality of the situation. By the time we got through our development, a company had already become the 800-pound gorilla in the space, and we thought, in order to beat them, we'd have to play the game a little differently. And so that's where we said, okay, let's create a free version. And ultimately, we ended up acquiring the 800-pound gorilla. So the strategy worked. LogMeIn sold for $4.3 billion, but it was nice to kind of be through the IPO filing. And then 6 months after I left LogMeIn was when I joined Dropbox. And what I had realized, and that's turning into a long introduction, so I'll wrap it up so you can actually ask some questions. But what I'd realized in these first two companies and kind of that journey from customer zero to IPO filing was that the most important part was really the early days of figuring out that growth engine. And I enjoyed that the most as well. And so I committed after the second one that I was only going to focus on that upfront stage and try to get really good at building that initial growth engine. And so that's where I went to Dropbox for just 6 months to go in an interim growth role. And actually it was part-time. So I split my time with Dropbox and Eventbrite, and Dropbox at the time was 8 people and Eventbrite was maybe like 15 people. So they're both really small. Just continued to do lots of companies going to market, and then decided to start my own company at one point. That's kept me bogged down for a lot of years of working my way through the venture capital we had raised, and ultimately it was not a great outcome, and we got acquired, but it wasn't like life changing. And but now I'm really going back and doing a lot more of that early stage growth stuff that I enjoy.
I didn't realize that you started your own company. Maybe we'd spoken about that briefly last time.
So through lots of pivots, I actually raised quite a bit of money just on a PowerPoint deck with not having anyone on the team. And in hindsight, it gave me such a long runway, and I'm so conservative on spending that it just meant many years of pivots. And we did some exits along the way, like a private equity exit for an asset. So we sold Qualaroo, which is private equity, and then put everything into growth hackers because for a number of reasons, but it was more of a episodic use case for Qualaroo, where I was trying to find something that would be more of an ongoing use case, but really struggled to get to product market fit. So it gave me a renewed appreciation of how important product market fit is, and that my strengths don't really start to matter until product market fit is there. And so that's what's brought me back to now seeking out those companies that are just on the brink of product market fit and helping them, really kick off that early stage of growth before they can start to hire the long-term teams and systematize a lot of it.
Right. So you've been at a lot of really notable companies and been involved in creating these unicorns. I'm wondering if you see a common thread.
I wouldn't necessarily say, the common thread of course is product market fit would be probably the most important common thread, but I can tell you like some of the things I vet for.
Yeah.
So beyond product market fit, probably the number one thing I look for is just chemistry with the founding team. It's really hard. And when you're in the struggle, it's very easy to just finger point. And if someone's not super collaborative and not trying to essentially telling me figure it out while we go just build product or something, but this is going to be a team effort to figure out, and we'll work closely together. That's a really important component. I also want to come into it with 2 or 3 ideas of how I think I will grow it, because the reality is that probably all 2 or 3 of them won't work. But if I come in with 0 ideas, then it's a little bit of fear that maybe I won't be able to come up with something to try. And so if I come up with 2 or 3 and I come up with 2 or 3 more after that, then eventually that gives me 5 or 6 different angles to figure out what will be that initial important feeder of growth to the business that becomes the foundation of the engine.
Yeah, makes sense. When you're starting to work with a startup for the first time on PMF, is there a specific process that you follow?
So I don't really work with them on getting to PMF because I think I think I have no unique advantages on getting to PMF. What I sometimes do, in fact, I'm doing it with a company right now, is when we see a lot of indications of PMF, but there's not quite enough data to say they definitely have it, then I'll help them through that phase of getting enough people on there to get the feedback to really see is there something here. And so a lot of that is kind of the famous Paul Graham "Do Things That Don't Scale" article, where so many of them want to, even though we don't have validated product market fit, help us figure out, Google AdWords or a referral program or something. And I think there's just so much to be learned in getting really close with the customers when you're going out and kind of recruiting them one by one, particularly if it's consumer, maybe you need to do something a little bit more scalable to get to the numbers. But if it's B2B, that just grind of, even when you're just coming up with the idea, you should already be engaging with the market and making sure that they have the problem that you think you're solving. Over time, you start to build a base of relationships that hopefully will become the customers long-term. Mm-hmm. But I do see a lot of companies that ultimately, they'll do a little bit of problem validation and then they'll build something and then they'll kind of start to grow. I mean, there's been so much written about. Some of the Steve Blank stuff was written probably like 2006, maybe. Like it's been around for so long, where it's like you get a few people, I think Steve Blank was sort of the foundation that led to Lean Startup, and he and Eric Ries kind of got together on that. And so I think there should be enough information that get something out quickly, get the feedback, iterate on that feedback. But surprisingly, I still see a lot of companies that really maybe wait a little too long to get the product to market. That's the early thing that I'm doing is sort of more light advising to push them to just take a risk and get it in front of some people. And what I tell them, it's in both of our interests. You don't want me coming in if you don't have product market fit, because I'm an expensive resource that just will not be effective if you don't have it. So let's keep it like pretty light advising until we can validate it. And then if it turns out that after getting enough numbers on there that it seems pretty far from it, then cut me and really, really make those early funds stretch. And then, buy yourself enough time to iterate until you have something that's really resonating with the market. And then I can help take it to market at that point.
Yeah. I, funnily enough, see the same thing where founders tend to work on something for far too long before actually maybe not even testing, but even just starting to talk to customers and see, what is the market like,
I've definitely been guilty of that. Even that LogMeIn case where I said, in the early days, that was really before a lot of these books were written, this early 2000s. But the, part of the reason that we came into the market and there was already an entrenched competitor was that we went through that long waterfall development cycle and probably 12 months of product development, and then came back out, and in those 12 months, somebody had gotten a lot of traction and we were behind, versus if we come out a little quicker, we might have taken a different path. I mean, ultimately, the interesting thing there is that once we decided we want to try to do this as a freemium business, your unit economics have to support that. We did not have unit economics that supported it in terms of the cost of delivering our service. We had some pretty high infrastructure costs that I think it was like $5 per user per year in kind of bandwidth and data center costs. And there's no way we could have done that for free. So there was some engineering that ultimately became our big differentiated engineering, which was, and that only took a few weeks, but basically they figured out a way to get it down to just pennies per user per year. And that enabled us to give away a free version. But again, like, we probably wouldn't have figured out to do that if we weren't in market and sort of seeing what was important to people. It was from there that we could come up with a strategy of how to have something that was relatively light for free and what would be a potential upgrade path. And then even from there was a ton of iteration to get the model to work.
Right. Yeah, I think freemium is something that customers actually expect nowadays, especially for SaaS, because if you can't see the product at all, then for me personally, I'm less likely to actually subscribe to that service.
Yeah. And it probably depends. Like if it's if it's a bigger kind of B2B solution, maybe a little less important. But
Yeah.
I agree, anything consumer or even small business targeted, there should be something light that they can get started with, and you sort of earn their trust to try a feature rich, more expensive product.
Exactly. Yeah. Trust building. And am I correct that you came up with the freemium model?
I wouldn't say I came up with the freemium model like overall. There was, I think Zone Alarms had one before we did. There was literally though only like maybe one or two. Most of them were in the security space, and maybe like I think AVG might have the antivirus might have had freemium as well, but it was, I was really inspired by saying, okay, when I looked at the space, the remote access space, so software to remotely control your computer, we had one company that was premium only, spending a lot of money and essentially arbitraging growth through, even TV ads, radio ads, and a lot of online advertisements, but they were positioned as super easy. And then there were a bunch of open source products that were growing really quickly, like VNC, but they were open source, but actually really hard to use. And even Microsoft had remote desktop bundled with the operating system. And so that was a lot of venture capitalists told us, we don't want to invest in you because Microsoft gives us away for free. And then we were like, have you ever used remote desktop? No. Do you know anyone who's ever used it? No. Well, it's because it's super hard. And here's why we're really easy. So, even in that case, it was easy or free. And so it was like, okay, how do we come up with something that's free and easy that becomes the baseline that we build onto to upsell to something premium? And so, I wouldn't say we were inspired by the other freemium. It was a little bit more like, oh, there's a couple of companies that are doing something that maybe validated it to be a little less crazy, but it was more like we came up with it and then saw that, okay, there's a couple of proof points out there.
Yeah, makes sense. Perhaps it would be helpful to address how you define growth hacking as the person that really coined that term, because there are so many misconceptions and so many different ways really that people use the term growth.
Yeah. And even so, I'll tell you a disclaimer before I do that even I've kind of evolved it myself over time. So much of the lens that I was, when I coined it, so much of the lens I was looking through was very early stage startups. It's like, early stage startups don't have the luxury to do all the things that are in a big, thick marketing textbook. You have to scrutinize absolutely everything by its impact on growth. And you don't know what's going to work or is not going to work until you test it. And so I was essentially saying you need to test and learn. And so there's a blog post that I wrote that kind of kicked off this whole mess. And that was the idea, is like, your startup needs a growth hacker, was maybe even the title of I actually kind of came up with a concept before I wrote the blog post. So I was sitting down with a couple friends, Heaton Shaw and Patrick Vlaskovitz, over a drink. And I said, I'm so tired of having the debate over like what kind of marketing you should do in an early stage startup. I feel like the really successful companies are taking a very different approach. And so I did have Facebook in mind at that time. So obviously they were quite a bit further ahead. So this was in 2010. I remember Patrick saying, you don't just coin a term, it doesn't work that way. And I was like, I just feel like this thing needs a name. It was trying to narrow down a set of things from what you would see in a traditional marketing book, but go deeper. So it was sort of like narrowing down sort of the horizontal list of things that would typically fall under marketing, but then go deeper into all of the things that are around conversion, engagement, and retention and referral, but ultimately a kind of a deeper set of places where you could be running experiments. But the idea is ultimately measuring how you're impacting customers with your solution, and that if they're not using your product, you're not successful. So really looking at it from both the funnel perspective, but even more deeply, like, if you're not retaining and engaging customers long term, you're not being successful. So that was the idea, was just to, and it was almost in reaction to the number of founders that were saying to me, hey, we need someone to help us build awareness for our startup. And I was like, yeah, unfortunately, you will never have the budgets to build awareness. You have to actually deliver experiences was sort of, and you have to do that in a cost-effective, sustainable way. So you can build awareness through those experiences. If you can acquire a lot of people and it costs you less money to acquire them and have them engage with your product, you will build awareness over time, but your goal can't be to simply spend to build awareness because you're going to run out of money really quickly. And so that was probably the trigger that made me kind of go against the perceived way most people were thinking about it, particularly founders. And I had so many venture capitalists at the time introducing me to founders and saying, hey, can you help these guys? It was always, I'm so happy we're talking. We really need someone to help us with awareness. And so that was the reaction to it. But it was me looking at having now already at that point brought 2 companies to market that, I was already actually outside of Dropbox at that point too. I'd already bought 5 companies to market that that were on track to become unicorns, and it was the approach that I was taking was very different than what I saw most companies take, but there were a handful of companies taking a very similar approach to me. And so that's where I was just trying to put a name on it. So I know that's a very long-winded answer, but when people are boiling it down to a super specific definition, I don't think I was quite, my definition was everything you need to do, everything you're doing needs to be scrutinized by its actual impact on growth and not all the other maybe softer goals that you might have.
Right. So simple, yet so complicated. Do you have anything to say to Patrick today? I'm kidding.
No, I mean, he I think pretty quickly realized that, we I think within a pretty short time, there was like 1,000 open growth hacker roles for startups.
Yeah.
Like it really, and again, I think it's less about me putting a name on it and more about kind of product market fit for a concept. And maybe the name, as controversial as the name has sort of been, I know it rubs a lot of people the wrong way, but I think a really boring name that maybe was a little less controversial might have gone a bit more unnoticed. And then I do have to give a lot of credit to Andrew Chen because I think he picked it up not that much longer after I wrote it. And he essentially said, growth hacker is the new VP of marketing in an article, but he had much bigger reach on his blog. And that ended up giving it a lot of wind.
What do you think it was about the growth hacking article that resonated so much with people?
Probably somewhat of just my track record, know, and even my track record was probably to some degree luck, and the luck not being anything more than the luck of applying this approach to product market fit before I really knew how important product market fit was.
Yeah.
And I did to be fair, I didn't know the name product market fit, but after my second company, I was like, all right, did we just get lucky here? What was going on? And that was part of what led me to say, okay, that was the things that we did in that first 6 months to a year of go to market that made the biggest difference. But it was also that at that time where I said, okay, now when I'm going out and doing the next thing, what would cause me to fail? I'm like, okay, I'm really good at this. I'm good at this. Gosh, if nobody actually wants the product, I could be really good at a lot of things and I'm going to fail. And so it was that recognition that the tactical side of things don't really matter if ultimately the product doesn't matter to the people who try it. And so I didn't call it product market fit at that time, but that I got my head around the concept of it pretty early.
I have the book right here. And I was telling Sean that this is a book that I got in my first role ever. So it's been ages. And I have pages highlighted and everything. This has really become a playbook for a lot of tech companies. And now we're seeing a resurgence in growth. I think LinkedIn also listed head of growth as one of the top positions for 2025. What do you think is behind the resurgence?
I have no idea. Honestly, it's funny. Like so much of my day-to-day these days is just heads down doing my own thing. And some of it's growth, some of it's not. But it's just sort of like self-care and then working on cool projects. And so I haven't really reflected on some of the broader trends that might be happening. But I think like probably if there's a resurgence, it's It would be a function of saying companies that really understand what a head of growth does
Hmm.
and empower of that head of growth to do the things that they should be able to focus on are probably outperforming those that don't have that function by a lot. And venture capitalists control the funds that are going into a lot of companies, and venture capitalists are all about like pattern matching, and that if they're seeing that pattern, they're probably the ones saying, what are you doing to address growth? Have you considered ahead of growth, and maybe steering their portfolio companies more in that direction? But I'm sure you've thought about it as well. I'd love to hear your thoughts on why maybe. I know it's you interviewing me as sort of the spirit here, but
No questions. I'm kidding. So yeah, I think you're definitely onto something there. My take is that it's VCs being a lot tighter with their capital these days. I mean,
Mhm.
I'm
That's a
more
good point
in
too. Yeah.
the climate tech, deep tech space. So there you really see it, especially because of the administration we have right now. And so
Uh-huh.
people are a lot less willing to, yeah, invest freely. They're
Right.
a lot more careful, a lot more cautious.
And
So
not only, just to build on that, like not only are VCs maybe tighter with their capital, but a lot of companies that raise money in 2021, the multiples have gone down a lot. And
yeah,
so even if you have access to money, it's going to be a lot more expensive money than it would otherwise be. So you really want to stretch those dollars out as long as you can between rounds.
yeah, exactly, exactly. And I think AI also plays a big part in that as well because it makes it
Uh-huh.
easier and more accessible, I guess, for non-technical people, but also for founders that are technical to just do more with less and hire less
Uh-huh.
people. So then I think it's also really about like how do we stretch the capital?
Yeah, and I wouldn't be surprised if AI actually plays a role in the education part there too. Just that,
Mhm.
what did these companies who were successful do differently compared to these companies? That the likelihood that ChatGPT or Claude is actually saying, bringing the attention of the growth role to a lot more founders than maybe would have stumbled across my book or some of the other books on the topic.
Yeah, yeah, exactly. So when you're talking about pattern matching and VCs, I was wondering, you've had, the unique position of working with a lot of different unicorns in the very early stages. Do you see any patterns there, or did you see any patterns at the time whereby the third or fourth company you were like, oh, hey, we should just do this again?
No, in fact, I think that's where I said the luck piece, because I actually think my success rate dropped over time
Okay.
because, like, there's not a lot that I can do to create a unicorn outcome if the raw ingredients aren't there to start with.
Yeah.
You could do a lot of things. If you have the raw ingredients, you can do a lot of things to mess it up and not have that outcome.
Mm.
But I think in every one of the cases that 5 of the first 6 companies I worked on had those raw ingredients where it was a product that was addressing a need that had $1 billion outcome type opportunities around it. And then it comes down to execution at that point. And I think the growth process is really important to maximizing within an opportunity that's there. But
Yeah.
if the opportunity isn't there, the growth process isn't going to necessarily make it. Maybe a little of that getting close to customers and iterating, and the more customers you bring in and you're really plugged in, maybe you figure out an adjacent opportunity that then
Mm.
has that headroom. But more often than, like in my case, almost all of those companies, it was right out of the gate, the product was on track to that potential. I give one a little bit of a counter example that would be Lookout, which as a business has actually changed a lot since the time that I worked with them.
Uh-huh.
But they went on to the $1 billion valuation maybe 4 or 5 years after I started with them. But when I first went in, I ran the "how would you feel if you could no longer use this product" question that I used to assess product market fit.
Right.
It's really funny to me when people call that the Sean Ellis test now, or the
Yeah.
Sean
I
Ellis
didn't want to interrupt
test
you, but
score. Yeah, but I never called it that. Other people named it that. But when I ran that question, I was always looking for a 40%. And when I
yeah.
ran it to the early users on Lookout, only 7% of them said they'd be very disappointed without the product. And I'd already committed to work with them for 6 months. Probably if I hadn't and I'd run that question, I might have run for the hills. But I I was already committed to work with them. But based on that survey, we were able to isolate the use case that the 7% were mostly focused on versus the rest of the people were less focused on that use case, and essentially reposition the product on that use case and
Nice.
streamline onboarding to quickly deliver on the benefits of that use case. So it took us maybe 2 weeks to make those changes because it wasn't any core product change. It was more about, changing messaging and then changing what they do in the product first. So kind of just the path into the product. And so the next group of people we surveyed who went through that path with that messaging were at 40%. And so it only took 2 weeks to go from 7% to 40%. And then because I worked with them for 6 months, at the end of that 6 months, it was up to 60% of all users saying they'd be very disappointed without Lookout. So sometimes that product market fit is exactly as the founders envisioned, but sometimes it's more of something that over time you find it within the broader vision. There's a narrower slice to that vision, and it's not just the companies I've worked with. I think that's the story of Instagram. That's the story of a bunch. Even YouTube, I think, was a dating videos initially, and they found within that the slice that was the huge opportunity.
Right. Yeah. That's a great example. I've had something similar happen with the early stage startups that I advise, where we do research and we, pivot the messaging a little bit to make sure that we're actually speaking to what they want or what they're looking for. I really like that you use that example, because something that I teach in my growth course that I think is very neglected is actually focusing on what power users do and then kind of reverse engineering what makes them successful so that you can then apply it to everyone else, right, that's using the product. That's such a great example of how to leverage that.
Yeah, I think everything initially is just theory or hypothesis.
Yeah.
And it's not until you actually have customers on the product that you can potentially validate if you have real value there. And so I think of that value as being kind of more crowdsourced. And the only way to actually know if it's there is to build it, put it in front of them, and then find those kind of red hot pockets of customers that love it, and then hopefully they represent a big enough market opportunity so you're not kind of just chasing a little niche.
Exactly. I don't think I've ever encountered a case where the MVP was just perfect,
Yeah.
It's always been like, oh, okay, and we need to change this and this.
Yeah.
And
even in the case of LogMeIn, it was like built the perfect thing for the market when we started out, but someone else had met that need. And so the market no longer had that need. So that's why we had to come up with freemium to resegment the market and essentially create the path that we brought something new to the market. Even though the core value proposition was the same, the way someone experienced it was different.
And so you said that you've changed your definition of growth. And I read your article that talks about going from growth hacking to a growth systems architect. So I'm wondering if you can explain, what does that mean, and why does it matter?
Yeah, I mean, that actually goes a little bit more back to the roots, maybe, of what I intended when I first wrote about growth hacking. I think a lot of my evolution and definition was being able to say, oh, okay, Microsoft is really interested in this. Some of these big companies, and I originally was envisioning it just for a startup. And so that's why I kind of broadened the definition over time.
Yeah.
Growth system architect, funny enough, like it's sort of what I always, I had thought of for myself. That's why for 6 months when I go into a company, I'm really architecting that initial growth engine. And it's all the same things that you would typically do in growth in a later stage company, but in a later stage company, you generally have something that's working already. And so you're kind of optimizing around the edges or coming up with something new to plug into it. But when you're first coming out of the gate, you validate that product market fit, and you still need to figure out how, maybe it's just going to be kind of something super vanilla where, okay, we're going to just run Facebook ads and we need to optimize a funnel. And if we drive some referrals on top of those conversions with something that works, in my experience, almost never has that been the growth engine. That the very kind of vanilla growth engine was not what worked for me in any of the unicorn level outcomes that I worked in. Like, doesn't mean that we didn't have some basic growth engine stuff, but it was always that like figuring out that other big piece. So in the case of LogMeIn, paid search was a big part of it, but again, it was paid search on top of freemium, and it was the freemium word of mouth engine that essentially led to 80% of our acquisitions were coming in organically through really happy users on our free product. And so when we paid to acquire a user, we knew we're bringing in a whole tail of referred users. And of course, that became sort of the playbook that I thought I would apply in the next business. And so at Dropbox, I thought, okay, I'll apply this same playbook. But it turned out that almost nobody was searching for a Dropbox kind of solution. The reason that worked really well for us at LogMeIn was that incumbent, entrenched competitor was spending tens of millions of dollars a month building demand for that category. And then we just harvested a lot of that demand with our free solution. Nobody was looking for Dropbox. It was a really innovative new product. They were growing pretty fast in private beta. And so the first thing I did when I got to Dropbox was not like, okay, I'm going to start making a bunch of changes. It was, I'm going to try to understand why this thing is growing fast. And so basically I ran a survey every single day. I took the initial private beta user group, broke that into, I think it was like 100,000 or maybe even 200,000 private beta users, and broke that into 100 or 200 lists of 1,000 people. And every day sent out a different survey to one of those lists to get smarter about what's going on. At that time, you didn't have kind of the amplitudes or the mix panels. So we had to essentially design our own tracking system. And fortunately, I had a pretty good tracking system that we'd built at LogMeIn. So I knew what I wanted, which ultimately was kind of the prototype for a lot of these off-the-shelf tracking systems today, because I had one of the first ones was Kissmetrics, that I essentially shared my spec for a tracking system with them, and that's what they built Kissmetrics on. But so I came in with that tracking system and said, if we have this, we'll be able to really visualize exactly what the flows are of people coming in, what the funnel looks like, and drill into the specific people that get stuck at specific points. So once I had that plus the surveys, then I could also, right out of the gate, you can do a lot of funnel optimization. That's pretty low risk. If you're 100 people start down a path and only 10 get to the finish line, if you can figure out what happened to the other 90, make some changes and get it to now 20 or 50 that get to the finish line, that's going to help the economics of the business a lot. So that's probably the first thing I did with Dropbox. So again, it's getting more and more people into the core experience. One of the other things we figured out, and I apply this thinking in a lot of places today, is you want to promote the full solution, but complexity is a huge barrier to adoption for normal people. And so when you tell them everything it can do, you scare away a ton of people. And so figuring out what's the right way to position the product based on how someone was discovering it, that was a lot of the early kind of onboarding paths based on how people were discovering it. But the biggest thing that I found was that referral was already by far how most people were discovering it. So most people who love the product were telling other people about it. And so I remember probably within my first week of being there, that was my hypothesis. I said to Drew that if we can get existing users to bring in more users and really focus on that as a channel, that seems like the foundation of a system that will scale a lot. And ultimately that's not just the referral program, but like optimizing the referral loops around a shared file, around collaboration folders, like that. Doing those things I think Dropbox was at the time it reached $1 billion in recurring revenue. It got there faster than any SaaS business had before. And it was almost no traditional marketing that drove that growth. It was all about really understanding what was driving the organic growth and just doubling down on all the pieces that would drive that. That would be their growth engine. So it's similar to the LogMeIn one, which was referral driven, but with a paid feeder that came into it. Part of the reason why I never tried an incentive for LogMeIn was when 80% of our users were coming in through word of mouth. it's like, man, if I suddenly introduce an incentive to do that and it doesn't work, it might actually break it. Daniel Pink's book, Drive, I think talks about like, yeah, once you bring a financial incentive to do something, a lot of times people only will do it if they have that financial incentive. And that was what was my fear of doing it at LogMeIn. But we're so early at Dropbox that I thought, yeah, let's offer an incentive for that referral and just see what happens. It clearly turned out to be the right thing. But I think the mistake a lot of other people make when they try to replicate the Dropbox referral program is that Dropbox already had incredible referral before we built the referral program with the incentives, and it was an accelerant on something that was working, as opposed to a lot of people like, we don't have any referrals, we need an incentive to start driving referrals, and it's much less likely to work in that case.
Yeah, I think I've heard that study before. And you said 80% of it was organic.
That was at LogMeIn, yeah.
Yeah, that's 80% is crazy though.
Yeah, and I mean, I think we were when I left, we were signing up maybe 100,000 a day. So that was like 80,000 new systems being plugged into the 100 million systems that had our software on it at the time I left. And that's the engine of growth that was there. That's the power of freemium. It's harder to get it going in the beginning because you have tight economics. So you can't really compete in paid channels as well, but you get that organic loop that kicks in. And so that when I talk about architecting the growth system, it's trying all the pieces that ultimately become that kind of differentiated growth system that powers that growth. And it's about understanding the unique situation of every company. You can't just like copy someone else's. It's really leaning into the advantages of your business, and you can't discover those advantages without lots of customer conversations, surveys, data analysis, experimentation. As you do all of those things, the system becomes clearer.
On that note, it sounds like you're really good at gathering data and you have a very holistic approach to it. So what would be some red flags that founders should look out for when they're initially starting to gather data?
I remember the first time that I discovered like a web analytics tool pretty early on my career. And I was at that first game company, and I think I lost 2 days of just studying data. It was like, this is fascinating. And then after the 2 days, I came up for air, and I was like, I did nothing to move the business further. All I did was look at a bunch of data. At that point, I vowed to never look at data that wasn't tied to making my next decision or informing the effectiveness of my previous decisions. I think that's the key, is that like that actionable data. You shouldn't just look at data for data's sake, because you just get lost in the data. And that's why I love the concept of North Star metric, for example, that it's so easy to just get overwhelmed and blinded by data. This one went up, this one went down. Is it good? Is it bad? But when you can come up with a metric that says, okay, this tells me that more customers are getting in aggregate more value from our solution, that's the key to long-term sustainable growth in a business. If I can start with the one metric that's most important and everything else is about helping me understand how to move that metric in the right direction, then I have a framework for kind of using that data. And so when I'm working with a company, that's one of the first things that I do. I don't say we need to come up with a North Star metric. First thing I do is say, we need to figure out what makes this product a must-have. Mm-hmm. And then, okay, whatever it makes it a must-have, now we need to come up with a metric that tells us we're getting more people to experience that benefit more often. And that's the metrics that's going to guide everything that we do going forward.
Yeah, I really like that framing, because in the past in my course, I've asked the technologists to go back to their team if they didn't have a North Star metric and talk about it. And then they'd kind of come back the next day and say, well, the PM said that the North Star metric is the profit for XYZ. And I'm like, well, that's not really a North Star metric. Yeah. Let's talk about it, Sometimes North Star metric kind of immediately gets equated to the profit that the startup is making.
Mm-hmm. Or maybe revenue.
Yeah.
If not profit, revenue, but something that's kind of a financial metric. Like
right.
For
yeah,
me,
like MRR.
Yeah. And for me, it should be tied really closely with like impact and mission too. Like what is it that gets people out of bed and excited about what we're doing with this business. And dollars maybe get the CEO excited, or, head of sales, or maybe a couple of people. Quantified progress on mission and impact. And these are the people that we're helping. Like my daughter works in medical device business where they're helping people with sleep apnea. And like, she is so tied to that mission, and she knows like every new customer that gets on this device is, they're potentially saving their lives. And she's had people who she was in process with who've died, and that like just brings it to mind. And so when she's putting in those weekends and that hard work, like she's powered by a bigger mission, and that bigger mission is really powerful. So if you can get the broader company powered by that bigger mission, and the North Star metric is kind of quantified progress on that mission, I think you just have a team that is a lot more aligned, a lot harder working, and ultimately can analyze the impact of the things they're doing against a thing that matters.
Yeah. So if a founder came to you and asked you, how do I know when I have product market fit? What would you tell them?
So yeah, two answers. Obviously, the surveys become pretty well known for that. And so of course I point to that. But if you had 80% of your customers saying that they would be very disappointed if they could no longer use your product, but most of them stopped using the product after 30 days, I would worry more about what they did than what they said. The challenge is that, if you have a product, say like Airbnb, that's maybe you're only using it a couple of times a year, if you're waiting to see if people stop using it, that could take a really long time to know if you had product market fit. So like I worked on Bounce, for example, in the travel space, luggage storage, and same thing, that like people use it very infrequently. So if we were trying to measure product market fit by how often they came back, we might wait a year or two before we even knew if we had product market fit, where by asking them, how would you feel if you could no longer use this product? If they say, I would be very disappointed, that's a really good leading indicator that they're likely to keep using the product. And I see a lot of founders get excited when they say, we didn't have very many people say they'd be very disappointed, but we had a lot of people say they'd be somewhat disappointed. And I tell them, I equate those to exactly the same as people who say they wouldn't be disappointed at all. When they say they'd be somewhat disappointed, that's like telling you it's a nice to have. They're all going to stop. And so it's, that to be a founder, you have to be super optimistic, and it's easy to want to find validating data that makes you feel like you're on the right track, but you have to, accept the truth if you're not, because you can really end up wasting a lot of money trying to grow something that doesn't have product market fit. That's the most important part of product market fit, is that if you don't have it and you try to grow, you're going to run out of money and go out of business. But if you don't have it and you are bringing in people to iterate and try to get the solution to something that becomes a must-have, you can make your funds last a lot longer. And then you have the foundation of something that can support long-term growth. And so it's really important to know if you have product market fit or not. The survey is one way, kind of a leading indicator, but ongoing usage is the more important way. And so ongoing usage, the other way of saying that is retention cohorts. So 100 new people using your product. If all 100 of them stop using it, you don't have product market fit. But if you get to a point that at around 50 of those 100, they stop churning, they keep using it long term, then that's an indication you have product market fit with those 50. And it doesn't have to be 50, it could be 5%. So Calm, the meditation app, only long term retains 5% of their customers, but that 5% has helped the company be worth billions and billions of dollars. And so it's the important part is that plateauing of your retention cohort. And so it needs to plateau somewhere, whether it's 5% or 50%.
That kind of highlights the importance of being intimately familiar with your own business and not kind of basing it on what other businesses are doing, even if it's a competitor. It also makes me think of, just with my background in product design, the amount of UX research I've done. I've seen so many cases where what a customer says they do and what they actually do can be very different. Right. And so I think it's a very important point that you call out there, to just be really careful about not just looking at the data, but also if you can kind of if you can watch them, that's kind of the best scenario to see how they really use things, but also, of course, looking at your analytics.
Yeah, and it's interesting you bring up the what people say they want to do versus what they actually do. That's part of the reason I phrased the product market fit question the way I did was, um, historically people just looked at a satisfaction question, but like my very satisfied and you're very satisfied is pretty arbitrary.
Yeah.
Whereas either you care if it goes away or you don't really care if it goes away. Being able to not say, what might I do in the future? Do you expect to continue to use this long term? You're probably not going to get a very helpful answer. But if you say, how would you feel if you couldn't use it tomorrow?
Hmm.
That's going to give you a more visceral, like, yeah, that would be really tough for me. I'm relying on this, or I get a lot of value from this. And so
Yeah.
just that phrasing, I actually came up with it just for a single company that was selling to managing directors, and they or to senior management in companies. And that's why I didn't want to ask it as a satisfaction question initially, because good managers never satisfied. They always want more. But if they don't get what they want, they're very disappointed. And so that's why I flipped it. But then I found that question like worked for a lot of businesses, but just that business was what initially got me thinking of that phrasing.
Makes complete sense. Are there any kind of false signals that you've seen in your experience?
Yeah, like I think freemium is a classic false signal and a mistake that I've made. I saw pretty good retained usage. I saw feedback on the survey on a SaaS product that I had built. And ultimately, I mentioned that I sold a business to private equity. It was all within the VC-backed company that I had founded. And the idea of selling that business was to fund this other business that I saw with a lot more headroom to it. But I made all of the decisions based on it when it was in free beta,
Hmm.
where I probably wouldn't have sold that other asset. It was a profitable business that we'd built up if I had waited to see what happened when I started charging for it. But I think I just got so excited about the initial signal, and I valued focus so much that I was like, okay, this thing has legs, let's go. And
Yeah.
it didn't really.
Yeah. How would a startup know when they're ready to scale?
So I think a couple of things. So obviously product market fit, you definitely don't want to scale before product market fit. And so getting to product market fit is partly about doing things that don't scale. If you haven't read the Paul Graham article, highly recommend it. And I actually kind of wrote my takeaways to that article on my Substack. So seanellis.substack.com, maybe 3 or 4 articles ago. So that's part of that. Doing things that don't scale is part of getting to product market fit and building that early traction. And then, but once you have that validated product market fit, then you're somewhat scaling, but you're scaling to build your long-term growth engine. So the difference is that before you have validated product market fit, I see a lot of teams figure out a channel that scales and then start communicating that to their investors or their board. And because they get excited and it makes sense. But then when that channel flattens out, they've already signaled that growth is important. So you have to say, we found this thing that brings in lots of people. And that's important because it's giving us the feedback if our product is resonating. And our goal right now is to validate product market fit. So while we're excited about this channel and the potential for it, we may turn it off once we have enough feedback. And particularly if that feedback says we don't have product market fit. Getting to product market fit is the main gate. And then once you have that product market fit validated, then getting lots of people in a sustainable way, if you can figure that out right at that point, that's great. Like it doesn't hurt to have that, but you need to be thinking of it not in terms of a single channel, but in terms of building that full system. And that full system might be fairly generic. As I said, it might just be, okay, we need to think all the way through. How do we convert, engage, and retain someone and potentially even drive referral off of that person? And what is their lifetime value? And are we investing the right amount to get them through? Is it a channel that's sustainable cost wise? And then, but you also want to be thinking about, is there a better way to get even more scale that's uniquely tailored to our situation? And you're more likely to figure that out by engaging with a lot of customers. So figuring that out can actually be a function of figuring out that one channel that sends a lot of people in, but you're not done when you figure out that channel. That channel is the means to now getting really deeply engaged with those customers to try to design an engine that provides massive scale and ultimately has something that's probably more organic than just manual pay to acquire customer one by one.
Everyone is talking about AI. I would love to hear how you see growth teams leveraging AI.
Yeah, I have not done a lot of kind of looking at how other growth teams are leveraging AI right now. And again, part of it is I'm so early stage focused these days
Yeah.
that I hear about exciting things that are happening, I think, from processing data more quickly to managing personalization, but I haven't been intimately close to any of those things to really comment too much on them. Where I get excited about AI right now is both as a builder. So I'm spending a lot of time in Lovable, plus as a thought partner, just like ChatGPT. I riff with ChatGPT all the time on just like figuring things out and just thinking through things. A blog post that I am maybe 80% done with that I've been working on is about how AI, everyone's talking about which jobs is AI going to take away first. It's probably going to be the recent college graduates doing the kind of junior stuff. I actually think in the short term that recent college graduates are probably the most AI native people out there. And just judging on seeing how my daughters are using AI, founders can benefit so much from hiring. And that's what this article will be about, is hiring a fairly recent college graduate to figure out and manage a channel where in the past you would have probably had to pay a pretty big premium for someone to do that because you didn't have the skills internally. And so you had to hire someone who's pretty developed already on those skills. But someone who's good at using just generative AI can figure out things pretty well if they're wired in the right way and driven. Today, like the ultimate starting team is really like a growth architect who's building the overall system, and then complemented with someone who's managing a single channel and really trying to figure out that channel, figure out how to run the analysis. Gen AI can be great with that, but again, they have to be super hungry, really self-driven to do that. In the past, they probably would have been afraid to ask a mentor internally too many questions because they don't want to be a big distraction.
Yeah.
And I think my kids are probably more advanced than me, and they're both college graduates in the last 2 to 4 years. And growing up, not knowing a world without social, without Google, now basically their whole professional lives, they've had now ChatGPT or a big part of it. The right people can do a lot with it. And if you're a founder, you want to be able to really stretch your dollars out. And if you're a new graduate, you want to be able to get responsibility that really helps you learn more effectively than if you had to be like a super junior analyst. And in today's world, that's like a huge win. When I think about AI, that's the area that I tend to get excited about, as well as just Lovable for building cool stuff. I've built a productivity app for myself that I use every day and helps me be a lot more intentional about what I'm going to do with my day. And I know there'll be a lot of other fun things that I'll build over time.
Awesome. Thank you for sharing that. One thing I'm also curious to hear about is, as someone with their hands in kind of multiple pots, advising, investing, and founding companies, I'm curious to hear more about your journey going through kind of working full time, having your own company, and then coming back to advising now. How did you figure out what resonated with you the most?
Yeah, I'm in a beneficial situation where I had 8 exits of some sort of companies that I've worked on. I don't have enough money that I would just like retire and do nothing, but I have enough that I can just do things that I really am drawn to and feel passionate about. And today it's really a lot of self-care stuff for, it's probably not the topic of your podcast much, but like,
Actually,
or maybe just I've only listened to a couple of episodes. I almost feel like I'm in training for when I go deep into a project. So I'll sometimes spend 6 months really rolling up my sleeves and doing an interim VP growth role, but really that initial system architect for the right company. And if I have to wait 2 years for that right company, I'd rather do that than having to settle for one that maybe didn't check all the boxes, but man, I really need that paycheck. So fortunately, between intro.co, where I do a lot of just like kind of 15 minute to 60-minute quick advisory sessions. I have a course, Go Practice. I have a few different things that bring in pretty like decent income altogether. It gives me a lot of time to just I think I've dropped 64% of my visceral fat since January of this year
Oh,
by
wow.
just being really focused on what I eat. So that, again, AI, everything I eat, I'm taking pictures of it, analyzing it with AI, being able to track what my protein and calories and just other macros are. A personal trainer 3 days a week, meditation. I'm in a business group where we hold each other accountable and check in every day if we've done our meditation or not. All these things I just did a Viome blood test that showed that in the last year and a half, my biological age dropped 5 years. So now
Oh,
my biological age is 10 years less than my chronological age.
oh, okay,
Um,
nice.
yeah, and that to me like is way more valuable than doubling my income. And so
Yeah,
still I'd love to work on stuff though that I'm drawn to, but like as I said, if I saw a business that was just awesome, but I didn't feel like I had chemistry with the founders, I'd rather not work on it. It's just,
same.
life's too short. Building up my health so that I can put 100% of my physical and mental self into an opportunity is really valuable. And and I can also see myself doing that indefinitely. So there's not like a finish line to retirement for me because
Mm,
like why would I want to stop doing what I'm doing now? So I don't know
yeah.
if you've ever read the Surrender Project book, and
No, I haven't.
it's the same author, I forget his name, but who wrote Untethered Soul.
Michael Singer.
Michael Singer, yeah, but it's basically his autobiography is a surrender project, and it's just sort of like
Okay.
whatever comes up, he just sort of accepted fate and went in that direction, and was super successful with it. But he never like said I'm going to start something because I can make a lot of money doing it. But he
Yeah.
still, it's kind of a side effect I think of just doing the things that are the right things for you to be doing.
Mhm.
I never want to have to chase a dollar, and if hadn't had some exits, maybe I'd need to just to fund college educations for my kids or
Right.
retirement funds. But I think I'd rather reduce my expenses and have like a really great life than have to work to just keep up with the Joneses.
Mhm. Yeah, I can really relate to that. It's funny, I was thinking about the full-time job thing today because I've had, I guess, the luxury, even though I came about this from actually getting sick. So I had long COVID really badly where I couldn't
Oh,
work for a year. And
yeah.
so that really kickstart my health journey and also
I'm sorry to hear
meditation for
that.
me.
Yeah, that's tough.
Yeah. I'm doing great now.
Yeah, yeah. But I mean, sometimes that's what it takes.
Oh my gosh, yeah, it really did because I'm also type A, so I'll burn myself out working for no
Yeah.
reason, and I think that was kind of the lesson there is like really learning how to take it easy. And
Mhm.
now, I used to operate on 100% battery and now I have 15% battery. What am I going to do with my day? How am
Yeah,
I going
yeah.
to prioritize and also
Right.
put my physical health first? A lot of people neglect that, but also when you have a full-time job, I don't think I really realize now until I have complete control over my schedule how much that drains you and you just don't have time for anything else.
Yeah.
So it's such a
Yeah.
luxury.
My first couple of ones, I think I was so obsessed with it that I didn't want to make time for anything else, and that was okay. Yeah, I'm in a
Spaces.
different place. And funny enough, probably part of my perspective on these things are that I did have cancer. I also had an autoimmune disease through college for
Oh,
4 years that was potential, like I could die from it. So that was like
yeah.
at 18 years old, kind of facing that reality, I think was enough of a system reset on both of those that maybe gives me that perspective that looks for that balance more.
Yeah, I think a lot of times when you hear about it and when you're going through it, of course, it's very challenging. But at the same time, it's like a big blessing because it really makes you confront what's important in your life.
And if I, like I said, with all the visceral fat that I've lost since January and cutting out alcohol and cutting out sugar and just like all these all these things that ultimately I feel really, really good now and super high
Same.
energy and when that right opportunity comes along, I know I could just bring so much more of myself to it that like I think in the long run, I'll probably financially end up doing better than if I was
Mhm.
kind of chasing dollar for dollar. If I don't, that's okay. I'm not too worried about it.
Yeah, no, that's great. Living the dream. I
Yeah,
also
absolutely.
meditate for an hour a day. So I think that does a lot as well in terms
That's
of
huge. Yeah.
how much impact you have. Because you'd think, oh my God, 1 hour from your schedule, you must lose time on that. But actually, it makes you so much more intentional.
Yeah. Yeah. I'm
Yeah.
only 10 minutes a day. So I
Yeah.
got room for
Maybe I should be your
more.
accountability partner.
It's I'm in a business group, a YPO forum where there's 7 of us, and you would think that it's just a bunch of people talking about their businesses, but we spend a lot more time talking about our health and well-being and families, and yeah, that's it's good to get that balance.
That's great. Last question for you.
Mhm.
How do you define success? How do you think about that?
I think that's the conversation we just had. Success is a lot less about financial outcomes and just more about having the luxury to work on the things that you want to work on just because you feel like they're important, they're fun, it's with good people. If you can wait between things to sink your teeth into those, that for me that's success.
Yeah, I like that.
Yeah. The opposite of success is having to settle for things because you need the paycheck.
Yeah, exactly. I think settling in general, I had a recent example where I was working on something business related and they said they couldn't do what I wanted. I thought it over and I was like, "No, I'm sorry, but I'm really intentional about what I do and if it's not this, then we're not going to do it." And then they came
Yeah.
back and were like, "Okay, we can do that." So it's such a great example of don't settle.
Yeah, yeah. And if they hadn't come back, then you would have done the right thing by not getting involved. So that's
Yeah,
yeah, it's nice to know what's required for you to be able to be effective in something.
exactly. Well, thank you so much for coming on the podcast. I really enjoyed this conversation. Lots of incredible growth advice there. And I've already learned so much from you with your book.
Awesome. Thank
But if
you.
you want to find Sean on his Substack, we'll link that below and anywhere else that people should find you.
Yeah, my personal site that links to yeah, all my social media is just seanellis.me. Awesome. All right. Thank you for Sarah for having me on.
Yeah, it's a pleasure.